everyone. Welcome to the Stock Market Morning Prep video for Monday, March 9th. Well, we did get that little bit of volatility that we were anticipating, and I mentioned that on Friday. We showed you the Bollinger Bands. They were contracting. I said, look, volatility seems to be kind of quiet, and we are looking for a bigger move out of this area. Now, we didn't know which way was going to happen, but nonetheless, we did get a move to the downside. So we had... it really was in the morning, one shot down, and then pretty much we were kind of chopping around a little bit. So if you weren't really short coming into the day, it was difficult getting short because we never really got a good retracement to sell any type of rally, at least intraday rallies. But nonetheless, we had a day down. So do we get some continued movement? Well, when you have 200 plus day, 300 plus day in the Dow down and or up, you usually get a little bit of a bounce for today. Okay, now we'll determine if that bounce is possibly for real, and maybe that was just a one-hit wonder. But I think not. I think that we are looking for a move lower, and it is to be expected. It's well overdue. I'm not saying that this move on Friday, is going to be that move because it's still too early to tell. But we can trade it to the downside by looking to sell any type of rallies into resistance that would fail on the way up. So I wanted to show you some indicators before we go into the indexes. And first, as you can see here, we have the SPX, the cash, and we have the average true range. And this is a great gauge of volatility, to gauge volatility. And as you can see, every time when the markets are moving up, volatility is actually moving lower. And then when we have that big move down, we have expansion of volatility and they start to move up. Well, as you can see here, what is this telling me? This is saying that we're at pretty decent levels, or low levels of volatility, right? We're at 17. As you can see, really low is 12, 13. But when you get to like 17, 18, this tells me that we have plenty of room to the upside to have volatility come into the marketplace, right? Which that would bring equity prices lower, okay? So you can see that here, plenty of room. Now let's take a look at the McClellan Oscillator. Now, McClellan Oscillator had a good reading of negative 46. I also mentioned on Friday, look at the Bollinger Bands, guys. They're starting to expand here, and sure enough, we had a break lower. Now, we have plenty of room to run to the downside before we get any type of oversold reading, and anything below 70 where we get outside that band, or at least close to it, 60, 70, even 80 or 90 for that matter, that would tell me that we are probably due for a bounce. So this volatility here, negative 46, is nowhere near being oversold as far as the market's concerned. Then we have the NYUD, which is advanced decline with volume, which I always like to see. And again, we are not even close to that washout. Well, we're getting there, and that's just one day, right? You could see what happened here the last couple of days, that advanced decline was breaking down while the markets were kind of holding in there. If you remember, we had those dojis about 3-4 days. We really did nothing the first week of March, as well as pretty much most of February. 3 weeks of February, we did nothing. The only good movement we had was the first week, and we just continued into the first week of March. We did nothing here, but you could see what was happening. The advanced decline, the breadth was starting to break down, even as we weren't going anywhere. And then Friday just, was the icing on the cake, and that pushed that lower. Now, we are a little bit below, but I like to see this a little bit more. And again, one indicator is not going to, we want to see all indicators start to move and get into these washout territories before we look for a bounce. So, today may be it. We might get a little bit of a bounce, and that's to be expected because we had a decent move to the downside on Friday. But I do suspect that I could see further selling, at least for some weakness for a couple of weeks here. Now, bullish percent, SPX, very, very reliable. As you can see, every time we had a cross, I left these out here. You can see we had a little bit of chop right here, but then we had this nice move here. So now what's happening is starting to curl again. So it wants to go somewhere, and if it does start to go down, and we do break lower, and we get some movement to the downside where we separate here like this, then that's going to give us a sell signal in the markets, and that's what we want to watch, okay? And this is something that I'm watching here. And you should follow along, too. Stock Charts has all of these indicators. It's a great little tool and a great little website for special indicators that you really don't get, like in Thinkorswim or some of the other free platforms that you guys are using. All right, let's take a look at the SPY 30-minute with the Bollinger Bands. And as you can see here, clearly, that we've gone nowhere here. Pretty much most of We had the move up. That was the first move up in February, and then we went sideways for 5 or 6 days. We had 2 days up, and then we went sideways for the rest of the month. And then just yesterday, we started breaking down. You could see the pinching of the Bollinger Bands. And going into the daily charts of the SPY, you could see this is what I said on Friday morning before the market opened. These little indecision candles here. We're really at these areas. We're at the 20 now. If we break the 20, we should head to the 50. And sure enough, we tagged it. The 50-day moving average. Now it's going to need to hold this 50 because if it doesn't hold, we're going to look for the bottom of this range where we've been since pretty much most of December. Okay, so keep an eye on today. I don't think today might be a big mover. I think, like I said, we probably usually markets will retrace probably a third to a half of this candle, and then we would reevaluate and see if we where this market's going to be headed. So the next couple of days are going to be critical. Here's what's scary. Transports. Remember, I put this bull flag pattern. I said, all right, so far, looking like a bull flag. Let's see if we break out of this bull flag. And again, it was getting a little bit too long in a tooth, but I said, let's just see what happens today. Maybe we break out here. Well, sure enough, the bull flag failed, right? So I'm going to get rid of that bull flag. Now this full-fledged downtrend, right? So we're going to look for lower lows and lower highs here, and that's what's happening. So, and this is the transports. This is our leader. So we really don't want to see this if you're a bull. But however, again, this is normal. This is healthy for the markets to at least try to correct a little bit. Again, tightening above the Bollinger Bands. We have contraction of volatility, and sure enough, we're starting to break down. And we lost the 50-day moving average. Not good. So we need to get back above it today. If we see some sluggish movement in the transports, I think that might be a good sign to say that we might have some further downside. IWM, same thing here. Another one of our leaders. It broke its 20. So if we don't get back above that 20 today, I'll be looking for the 50-day as our next target. Next would be the diamonds, and diamonds already hit the 50-day moving average along with the transports, which they kind of move in sync actually. But if you see the 50, that below this, we break below this 50 on a closing basis, I'd be looking for this area here. That would be the 200-day moving average. And remember, guys, if we start losing the 200, now we're far away from that, but if we start losing that 200-day moving average, remember, a lot of fund managers look at the 200 as okay, above the 200 we buy stocks and accumulate. Below we start loosening up our belt and start loosening some of these positions. So gotta be careful with that. Okay. All right. Next is and last will be the Qs, and you can see the Qs held up really well. It is still above the 20. You can see the contraction of the Bollinger Bands. Once we break that, then I'll be looking for the 50-day moving average. Okay. So today, I'm looking for some quiet to slightly move higher, which would be fine, normal price action, and then let's see if we come into some weakness in the next couple of days. If that is the case, that we get some weakness, then I would be looking for, at least for now, a pullback, and then we'll see what happens during that pullback. Have a great day. We'll speak to you tomorrow. Take care, everybody.